Alright, listen up folks. Imagine this. Money hitting your bank account every single month, like clockwork. And get this, you're not clocking in, you're not running some crazy online business at 3 a.m. No, you are simply collecting money. That's right, cash flow baby, the kind of income that dreams are made of. The kind that lets you sleep at night, knowing your money is out there, working harder than you are. This isn't some Wall Street fantasy I'm spinning here. This is real, this is achievable, this is the power of dividend income. We're talking about true passive income. Think about it. What would you do with an extra stream of income? Travel more? Pursue a passion project? Breathe easier knowing your financial future is secure? I'm here to tell you that you don't need to be a Wall Street wizard. You don't need a fancy finance degree. You don't even need a mountain of cash to get started. What you need is a plan. So buckle up, because your journey to financial freedom powered by dividends starts right now. Let's make some money. Booyah! So, what in the Sam Hill are these dividends I keep raving about? It's simple. Imagine you own a tiny piece of a big successful company. You're a shareholder, an owner. Now, when that company makes a profit, they can share some of it with their loyal owners. You. That share of the profit paid out to you as a dividend. It's like a thank you from the company. Think of it like this. You buy shares of a company like Coca-Cola. They're making money hand over fist. So as a part owner, Coca-Cola says, hey, thanks for investing in us. Here's your slice of the pie. And boom, a dividend payment lands in your brokerage account. It's not a loan. It's not a bonus you had to beg for. It's your rightful share of the company's success. Dividends are straightforward. They are real cash. Money that works for you while you're out living your life. Now you might be asking, why all the fuss about dividends? There are other ways to make money in the market, right? And you're right. But let me tell you why dividends are special. They are the closest thing to true passive income you're ever going to find. I mean, really passive. Once you own those dividend-paying stocks, the money just flows. Think about it. What does passive income truly mean? It means money that comes in without you actively working for it. Selling products online, that takes work. Managing a rental property, that takes work and headaches. Writing a book, that takes a ton of upfront work. But dividend income, once your portfolio is set up, those checks, those direct deposits, they just keep coming. Whether you're sleeping, vacationing, or playing golf, that's the dream, isn't it? That's financial freedom. Dividend income provides a level of predictability that other investment strategies often lack. While stock prices can go up and down like a yo-yo, and believe me, they do, established companies with a long history of paying dividends tend to keep paying them, even during tough market times. This creates a steady, reliable stream of income. It's like having a financial bedrock. This stability is incredibly valuable, especially as you get closer to retirement or if you want to quit the rat race early. Alright, let's get down to brass tacks. The million-dollar question. Or maybe it's the $30,000 a year question. How much money do you actually need to have invested to live comfortably off dividends? This is where a little bit of simple math comes into play. Don't worry, I'll keep it easy. No calculus required here, folks. It all starts with figuring out how much income you need each year. Let's say your goal is to have $2,500 per month coming in from dividends. That's a nice round number. So, $2,500 a month. Multiply that by 12 months, and what do you get? You get $30,000 a year. That's your target annual dividend income. Now, how big does your investment portfolio, your dividend machine, need to be to churn out that kind of cash? This is where a little concept called dividend yield comes into the picture. It's super important, so pay attention. Dividend yield is simply the annual dividend per share divided by the stock's current market price, expressed as a percentage. For example, if a stock trades at $100 per share and pays an annual dividend of $4 per share, its dividend yield is 4%, got it? So, you know what dividends are, you know why they're awesome, and you have an idea of the numbers involved. Now, how do you actually build this dividend-generating dynamo? What are the nuts and bolts? The first step, and it's a big one, is choosing the right investments. We're not just throwing darts at a stock list here, people. We need to be selective. We're looking for quality companies. Companies with a proven track record of profitability and, crucially, a history of paying and increasing their dividends. You have a couple of main choices here. You can pick individual stocks, becoming a direct part owner of companies you believe in. Think blue-chip giants, companies that have been around for decades, weathering storms and consistently rewarding shareholders. Or if you prefer a more diversified approach, or if picking individual stocks feels too daunting, you can invest in exchange-traded funds or ETFs, specifically dividend-focused ETFs. These are baskets of dividend-paying stocks all bundled together for you. Instant diversification. It's a great option for many investors. Okay team, let's talk about one of the most powerful wealth-building tools known to humankind. I'm not exaggerating, it's the magic of dividend reinvestment. This is where your dividend machine really starts to hum. This is how you put your money to work, and then put the earnings from that money to work too. It's like having a team of tiny little workers, all generating more income for you 24/7. It's called compounding, and Albert Einstein supposedly called it the eighth wonder of the world. He was a smart guy. So, what is dividend reinvestment? It's simple. When a company pays you a dividend, instead of taking that cash and spending it, you immediately use it to buy more shares of that same company, or more units of your dividend ETF. Many brokerages offer something called a DRIP, a dividend reinvestment plan. You can often set this up automatically, so every time a dividend hits your account, bam! It's instantly put back to work buying more income-producing assets for you. It's effortless once it's set up. Why is this so powerful? Because it creates a snowball effect. Let's say you own 100 shares of a stock that pays a $1 dividend per share each year. Section 6. A glimpse into your future, your dividend empire in action. Let's paint a picture. Let's look at a hypothetical plan. Because seeing is believing, right? Imagine you start today. You're committed, you're focused. You decide to invest $500 every single month into a diversified portfolio of dividend-paying stocks, or ETFs. And let's say this portfolio has an average dividend yield of 4% per year. And crucially, you're reinvesting all those lovely dividends. Every single penny goes back in to buy more shares. That's the plan. Simple, but powerful. Now in the first year, that $500 a month adds up to $6,000 invested. With a 4% yield, you'd earn about $240 in dividends. Not life-changing yet, I know. But you reinvest that $240, so now you have a bit more capital working for you. Fast forward 5 years. You've consistently invested $500 a month, you've reinvested all your dividends. Your portfolio isn't just the $30,000 you put in. Section 7. The upside: why dividend living rocks your financial world. So, we've talked about the how, now let's talk more about the why. What are the real, tangible benefits of building a life funded by dividends? First and foremost, it's that beautiful phrase, passive income. I can't say it enough. Money that flows to you without you having to trade your hours for it. This frees up your time, your most precious resource. Time to spend with family, time to travel, time to pursue hobbies, time to volunteer, time to do whatever you want to do. That's the ultimate freedom, isn't it? Another huge advantage is predictability. While stock prices can be volatile, dividend payments from strong, established companies tend to be much more stable. Many blue-chip companies have a long history of paying and even increasing their dividends year after year, through good times and bad. This predictability can be a godsend, especially if you're relying on this income for your living expenses. It helps you budget. It helps you plan. Section 8. The downside: keeping it real risks on the dividend road. Now I'm always going to shoot straight with you. Living off dividends sounds like a dream, and it can be, but it's not without its risks. We need to be aware of the potential pitfalls. No investment strategy is completely foolproof. The first, and most obvious risk, is that companies can cut or even eliminate their dividends. Yes, it happens. If a company runs into financial trouble, or if management decides to reinvest profits differently, that dividend you were counting on could shrink or disappear. Ouch! This is why diversification is so incredibly important. You don't want to put all your eggs in one basket. If all your dividend income comes from just 1 or 2 stocks, and one of them cuts its dividend, you're in trouble. But if you're spread across dozens of different companies, in different sectors, or if you're using a well-diversified dividend ETF, the impact of one company cutting its dividend will be much smaller. Diversification is your best defense against this risk. Section 9. Final pep talk. You can absolutely do this. Go get 'em. Alright, we've covered a lot of ground. We've talked about what dividends are, why they're a fantastic source of passive income, how to figure out how much you need, and the strategies to build your very own dividend machine. We've even looked at a hypothetical plan and discussed the very real benefits and the potential risks. It might seem like a lot to take in, but I want to leave you with one overriding message. You can do this. Absolutely. 100%. Building a portfolio that allows you to live off dividends takes time. It takes discipline. It takes patience. There will be ups and downs in the market. There will be moments when you question your strategy. But if you stick to a well-thought-out plan, if you invest consistently, if you reinvest those precious dividends, and if you focus on quality, you are putting the odds overwhelmingly in your favor. This isn't rocket science. It's about smart, steady progress over the long haul. Every dollar invested is a step closer to your goal. Don't be intimidated by the big numbers. Don't be discouraged if you're starting small.